Good afternoon, everyone. It's Pablo Zuanic, equity analyst at Zuanic and Associates, following the cannabis space. We're very glad to have an esteemed panel today to discuss a pre-roll segment in Canada, which of course is the largest segment now, even bigger than flower. So we have Adam Coates. He's the Chief Revenue Officer for Decibel Cannabis. We have Scott Lough, VP Product Management and Marketing at Canopy Growth. And we have Bradley Gunter, SVP of Sales at Organigram Holdings. Welcome to all of you.
Thanks for having us.
So look, let's start with introductions. Just brief introductions. Each one, introduce yourself and briefly discuss the company that you represent. I'll start with you, Adam.
Sure. So my name is Adam Coates. I'm the Chief Revenue Officer at Decibel Cannabis Company. We're DB on the Venture Exchange and headquartered based in Calgary. I oversee all of our sales, both international and domestic, our product development and innovation, and marketing. So sort of full commercial scope for the business. So Decibel is a Canadian licensed producer. We have four facilities, two cultivation, manufacturing, and a GMP manufacturing and cultivation site in Canada. Our products and our main brand, General Mission, is distributed all over Canada and one of the largest brands in Canada, specifically in pre-roll and in vape. So generally, focus on the domestic recreational consumer in Canada. And then by virtue of our acquisition of an EU GMP licensed facility, in Chatham, Ontario called Agmedica, we're a fairly larger exporter and manufacturer to medical markets outside of Canada.
Thank you. Scott, go ahead.
Yeah, thanks for having me today, Pablo. My name is Scott Lough. I'm the VP of Portfolio Management and Marketing. I oversee the product portfolio assortment for our recreational adult use business here in Canada, as well as our marketing teams. I've been with Canopy Growth for over 5 years. I took this new role back in July of 2024 last year. Before that, I was our head of finance, leading our finance transformation for our Canadian business. And prior to that, I had led roles in our product development team, overseeing flower and pre-rolls development.
Thank you. Bradley, go ahead.
Thanks for having me. I'm Brad Gunter, Senior Vice President of Sales for Organigram Canada. So our branded rec portfolio and our domestic B2B business kind of fall under my team. I've been at Organigram for 7 years. This past year has been especially exciting. We've become the #1 LP by market share in Canada. We now have 5 sites across Canada. We have our Lac Superior site in Quebec, which predominantly produces our flower for the Quebec market, in addition to hash across Canada. We have our Winnipeg production facility, which produces our gummy portfolio. We are a top 3 LP in the gummy category. And then we have our 2 new sites that we brought in with the Motif acquisition in London and Aylmer. London acts as a fulfillment hub for Canada for us, and it's very close to the OCS distribution center as well for us too, which is a great net benefit. And then we have our vape manufacturing out of Aylmer, Ontario as well. And then we have the mothership site, which is where we started out of Moncton, New Brunswick, which is where most of our flower is grown and our pre-roll manufacturing takes place. We do have 3 brands in the top 3 brands in the top 10 in Canada now, with Shred, Box Hot, and Big Bag of Buds, and all 3 of those also compete in the pre-roll segment too, which we could talk about a little bit later. But thanks for having me.
Yeah, no, that's great. Thank you for that. So look, for the audience, as usual, we'll take your questions, but send them by email or put them on the chat room in Zoom or on the X bubble. I'll try to go through them. But we have a lot to cover. But first, the comment I would make is that pre-rolls, in the case of Canada, based on the Hi-Fi data, is the largest category. Close to 36% of sales nationwide, and even higher in some provinces. In the US, in most markets, pre-rolls are on that 18-19% range. So I'm going to ask you a few questions here, and I want all 3 to comment, but I know there's a lot here. But how would you characterize the growth momentum of the pre-roll segment versus the overall market in Canada? What is driving this? In most US markets, like I said, pre-rolls is #3 category. What's different about the Canadian market that pre-rolls are such a large category? Any specific segments in pre-rolls that are performing better than others? Let's start with that. Adam, I'll start with you.
Sure. Yeah. We're definitely seeing the growth in pre-rolls, and we see the growth in pre-rolls in Canada, like through 2027, sort of leading all product category sales, and growing faster than the market. What we're seeing, what we've seen historically is, now that infused pre-rolls are pretty well established within the marketplace, that it's sort of leveled out to some degree, roughly a 2/3, 1/3 split, depending on, seasonality. We'll adjust that a little bit, but that's generally where we've been between standard pre-roll and infused pre-roll. I think two things that are leading to the growth from my perspective. One is just general overall consumerism, leading to easier to consume, ready to consume products. I think you see that, in multiple other industries, whether the beverage alcohol, the snack space, even into media, consumers want to consume products, fairly quickly. But I also think pre-rolls is one of the categories where you can really innovate and create sort of newness, whether it's by format, pack size. If you're getting into the infused pre-roll category, there's lots of different extracts and sort of applications of, mixing extracts with kind of dried flower to create sort of new and interesting products. And so that feeds in really well with where the consumer is at, is wanting, and demanding sort of, those products that are easy to understand and easy to consume.
Thank you. Bradley, on the same topic?
I agree with most of what Adam said there. Obviously, consumers are looking for kind of that easy consumption occasion, and we see like pretty strong seasonality indicators when we go through the summer months as well. The other one I would point to too that's unique in Canada is the province of Quebec. Obviously, they have vapes launching in November. But when your second most populous province doesn't have vapes since legalization, and now it kind of over-indexes the category for pre-rolls relative to what we see in the US or rest of Canada as well. And in addition to that, when we look at the category of infused pre-rolls, like we go a little bit deeper and we look at coated versus non-coated IPRs. And when we look at the coated business, that's where you're seeing the most growth within the pre-roll segment. I think coated pre-rolls represent about 60% of infused pre-roll sales now, whereas non-coated represents about 40%. So we're getting down into even deeper segments when we look at pre-roll versus infused versus non-infused.
Got it. Thank you. Scott, on the same topic? Scott, on the same topic? Can you hear us?
And just to kind of echo what the gents are saying, hear me? Probably.
Yeah, go ahead. Yeah.
Can you hear me?
Yes.
Great. Yeah, so echoing what the gentleman has said, pre-rolls have been on an absolute tear over the past year. As we look at the two different segments, one of the major drivers that we see, leading to the pre-roll growth is the utility. The data that we see a lot, majority of the consumers who purchase flower end up consuming it through pre-rolls. In Canada, you can find pre-rolls for about the same price, if not cheaper than the flower equivalent, which is driving those consumers into the category. And then I think when you look at the infused space, relatively new category to the illicit market, something that didn't really exist before recreational in a meaningful way. And I think the infused pre-rolls is a format that enables very clearly to attack the consumer needs, the higher potency, the flavor, just the overall experience with infused pre-rolls, clearly resonating with the consumer and what the consumer is looking for within the category. So I think those are the two major trend lines that we see leading to pre-rolls continuing to be a dominant segment in the Canadian landscape.
Okay, Scott, I'll stay with you there. Just expanding on some of the points here on the segment overall. So in general, how has a competitive landscape changed in pre-rolls? There seem to be more SKUs, more promotions, there's been some disruptive innovation. Yourselves with Claybourne just launched recently, about a year ago. How would you describe the changing competitive landscape in pre-rolls? That's a question for everyone, but I'll start with Scott. And also, is the current excise tax structure more of a burden on pre-rolls than in other categories, or even in some sub-segments within pre-rolls? Scott?
Yeah, absolutely. So definitely more SKUs have entered the pre-roll market, a lot of additional competitive pressures coming into that space. We don't see the speed of innovation slowing down. We initially saw it with distillate, keef coated. We saw liquid diamonds come in, terp sauce, live resin, full spectrum. So as Adam alluded to earlier on, there's a number of different inputs that you can put into these infused pre-rolls that drive that innovation, drive that market segment. On the tax burden, we definitely see obviously the infused pre-rolls getting hit very strongly with that excise tax tied to it being a concentrate product versus its dried flower equivalent. That we definitely see that leading to a large gap in terms of price points between the non-infused and the infused pre-roll space.
Right. Thank you. And the same question, Bradley, competitive environment and the tax structure.
Yeah, and just maybe to tack on to that, I mean, as infused pre-rolls grow as a contribution to the category, the tax burden grows with it, and that's been kind of the unfortunate outbreak with the infused pre-rolls is just the gross to net conversion for the category. Just you're losing basically half of your dollars to excise tax on the infused category. In terms of how the landscape's changed. We've observed that the innovation slowed a little bit competitively, but we feel like that's more provincial board driven at this point. I think it's no secret that the OCS is going through a bit of an assortment cleanse right now, and even going so far as to try to get the category on more consistent price packs. A lot of the LPs have been a little cute, and I think all of us have tried this at one point or another, but you're going out at 3 times 0.45 to hit a price point. The OCS is starting to put a bit of a clamp on that to just get to more consistent price formats. It allows the stores to better understand what they're purchasing and how to assort their categories. And you're going to start to see that inform the competitive landscape, because generally the OCS protocol, the SQDC protocol, the AGLC protocol, they inform a lot of what you see competitively across Canada.
Right. Thank you. Adam, on the same topic, competitive landscape and tax structure.
For sure. Yeah. On the competitive side, it certainly has ramped up over the last couple of years, and especially in the last year and a half. I think one of the interesting things about infused pre-rolls that maybe the average person wouldn't understand is they are very difficult to manufacture. So, what you see, over the last 7 years of legalization, is as soon as a product category gets hot, you see about every other LP trying to jump in and take a piece of it. But what's different about infused pre-rolls is they're very difficult to manufacture and do them well. So there is a bit of a barrier to entry there. You can't just sort of slap something in a bag and hope it sells. For them to perform, for the consumer to be happy with it, to be at a price point that makes sense for the board, the retailer, and then the end consumer. There is a lot there that goes into making, a high quality and a good performing, consistent infused pre-roll. And so, that along with the excise burden, as was noted earlier, there's an immense excise burden. We launched some higher potency infused pre-rolls tipping in at about 60-ish%, 62%. We're paying upwards of $10 a pack on excise, right? And so that puts pressure on margin. We know the cost of distribution is not going down in the retail environment, and the competitive nature is going up. So, really, I think what you're going to see in the infused pre-roll category over time is the really good operators, the ones who have, come with very efficient, manufacturing capabilities at scale. And I think we've done a really good job of that, at Decibel, having been produced infused pre-rolls for the last 4 years. So not just innovating for innovation's sake, but, looking where the consumer is going, what they're looking for, where there's white space and where there's opportunity to improve on, other products that are out there. So I think all of those need to be considered as you think about further innovation within the infused category, as it's not as straightforward as maybe making a vape or a dried flower product.
Right. Thank you. Look, let's move the discussion now to the strategy of each company in pre-rolls. I'll stay with you, Adam. I'm going to read some of the questions and then each please touch on them. Are pre-rolls a key focus category for your company? Are pre-rolls your number one category? I understand some companies have very diversified portfolios of formats. Some are more concentrated than others. Please highlight any brands and segments that you're focused on. I think you mentioned Infused in your case. Any recent launches or changes in your strategy vis-a-vis 2 years ago in pre-rolls? Your price positioning, if there are tiers within pre-roll, we see them in flower, not so sure in pre-rolls. I think there are too. And how would you characterize your performance in the pre-roll category over the past 12 months? Let's start with you, Adam. I'll stay there with you. So your strategy in pre-rolls, Decibel.
Sure. Yeah. It's no secret, Decibel is our number one product category is pre-rolls, and specifically infused pre-rolls led by General Admission, as the number one brand in the category. So General Admission, continues to be our main focus, and sort of our hero brand, so to speak. We do have another brand called Vox that participates, in the category, but predominantly our sales are in General Admission. I think the launch of Claybourne or Jeter last year, Claybourne at the end of 24 and into 25, certainly ramped up the competitive pressure. And so we've been able to react, and I think really our strategy is about going where the consumer is at. So I think the most impactful launch this year was our Ultra Infused line under General Admission. So this takes our sort of regular 38 to 44% distillate infused pre-roll, and instead with diamonds of two forms, kind of ramp up the potency to about 60% on average. So we launched those in sort of March, April of this year, and since then, we've seen our overall market share, stabilize, and get back to a growth trajectory. So we sort of play in sort of two main price segments right now. What I'd say is core, where sort of where General Admission distillate infused lives. And then our Ultra Infused line sort of is in a core plus or premium, as it is as a premium for the extra potency outcome, and obviously, as we talked about, the excise burden that goes along with that.
Right. So Adam, I'm going to stay with you there. A couple of points. So I think at the beginning you said infused about a third of the category, non-infused two-thirds. I would have expected, given the entrance of Jeter, right, Final Bell, and then Claybourne more recently, that would have given more impetus to the infused category, but it stayed relatively flat on that third of the market, of the pre-roll market. And I'm a bit surprised about that. Any thoughts on that, or that's just normal?
Yeah, I mean, I think you would have expected the category to grow. Overall, we've seen pre-roll continue to grow and be sort of the leader from an overall category. But to your point, I think, we didn't see that ratio or that split between standard pre-roll and infused pre-rolls. I think there's been, a number of winners in the standard pre-roll lineup. I think the potencies in standard pre-roll have also come up as well. So I think that's been helpful to standard pre-roll. And I don't track the pricing super close on the standard pre-roll side, but from an affordability perspective for some consumers, infused pre-rolls certainly are a premium to that standard pre-roll. So yeah, would have expected a little bit of an impact on the ratio. What we generally see is, from call it May to September, you do see or infused pre-rolls sort of come up a little bit to close to 40%. It's not quite there. It's probably 38, 37% of the category. And then, in the shoulder seasons, it sort of comes down. But yeah, what we've seen is the trending has stayed relatively consistent over the last kind of 18 or so months, despite sort of two big brands, joining the segment.
Right. Got it. Thank you, Scott. I mean, same question for you in terms of a strategy at Canopy growth and pre-rolls, and of course, a very successful launch of Claybourne over the last 12 months.
Yeah, absolutely. So pre-rolls is definitely one of our top three categories that we're going after, both infused and non-infused. And we obviously see big opportunities outside of pre-rolls, but that is our number one focus. Within pre-rolls, we have obviously our Claybourne liquid diamonds. This year we launched our 7 acres live resin infused portfolio, as well as our Deep Space plus 60 infused to the maximum potency infused lineup. But also on the non-infused side, we still have our Tweed Quickies, our Highway 2x1s. So we play both in our 7 acres non-infused flower portfolio. So we play both the non-infused and the infused side of the pre-roll segment. As a company, we're very focused on the mainstream and premium segments of the market, or where we can find premium margins within that. And from a characterization of our performance this year, we're obviously very happy with the performance of Claybourne. Our launch this year really helped us catapult in the pre-roll area. We see some opportunities and a little bit of headwinds within the non-infused side of our portfolio, but we've unlocked some things there that we're excited and we feel confident about being competitive in that space as well on a go forward.
Right. And just staying with you, Scott, in terms of, I think Adam or Bradley mentioned the idea of barriers to entry within infused pre-rolls, not so easy to manufacture. Do you see it that way also?
Oh, definitely. That's one of the big things that, we're really excited about our Claybourne brand is it is, as Adam said, it's not easy to make a superior infused product. There is a little bit of a barrier to entry there, and we're really happy with what we unlocked internally, and we're excited to continue to expand on that innovation.
Got it. Thank you. Bradley, same question for you in terms of strategy, Organigram with pre-rolls. And correct me if I'm wrong, like the other two companies, I think very concentrated on infused, not 100%, but in your case, I think it's a bit of both. But tell us about your strategy.
So pre-rolls is one of our largest categories. I wouldn't say it's our largest, but between flower, milled, pre-rolls, and vapes, it makes up between 85 and 90% of our revenue, depending on the time of year. So we have a pretty diversified category portfolio, but pre-rolls is definitely where we want to win. When we look at the category itself, we kind of break it out between pre-rolls and pre-rolls and then infused pre-rolls, sorry. One of the categories where we feel like we have the most room to run is actually traditional pre-rolls right now. We had an outstanding year on Big Bag of Buds this past year. We launched quite a few new strains that have really shown some stickiness in the market. And when we look at some of our peer brands who've had similar success in whole flower, they do have a really strong strain-specific pre-roll lineup that we're going to look to bring in with the Bag of Joints line. So it'll be that silver bag. It's a top 10 brand in flower, so we feel like we have quite a lot of room to run there. We're only at about a 5.5% share in pre-rolls nationally right now, so we're pretty significantly below where we index on flower. And then with infused pre-rolls, with the acquisition of Motif, when we look at the Box Hot brand, that was a lot of white space in our portfolio, both on vapes, obviously, but then coated infused pre-rolls as well. We had a lot of early success with Shred Heavies, and that brand continues to kind of chug along. But obviously, we've seen a pretty dramatic shift into the coated infused pre-roll space. So we launched Diamond Doobies as a 2-pack at the time when we purchased Motif. And then since then, we've started to expand it out into additional flavors and larger formats, which is where the category generally sees the most uptick from a purchasing standpoint. In addition to Box Hot, which we would kind of classify more in the mainstream segment, we're undergoing some renovations on our Debunk Darts, which is also an infused pre-roll. That would be more of a premium. So starting to see some of those more premium infusions like live resin that Scott just alluded to, like a hash. And we feel like Debunk has a really good plan in place that we're going to be rolling out later this winter on that brand too.
Bradley, can you, if you can, but how do you leverage I mean, BAT in terms of their expertise with pre-rolls? Can you talk about that briefly?
We don't actually have too much going on with the Center of Excellence on pre-rolls. Most of it's been non-combustible in nature, like through our fast emulsion tech with Edison Sonics. We do have some exciting launches ahead in the beverage category, leveraging that technology too through our Center of Excellence, but that's been mostly where the focus has been.
Right, got it. Look, I'm going to stay with you, Bradley. Now let's move the discussion to the consumer. I'm going to ask you a few questions, but the same for all three. How well versed is the consumer on pre-rolls? And, what are the key factors the consumers are looking for in choosing a pre-roll brand or SKUs, or is it mostly price driven? How much do any of the following matter? Flower quality, shake versus flower, infusion and quality of infused products, whether kief, live resin, packing, type of rolling paper, cannabinoid and terpene profile, freshness, moisture, price. I know there's a lot there, but sometimes we wonder about the pre-roll consumer. And I guess a roundup question would be here: how can a company convey all these product attributes to the consumer given all the advertising and communications restrictions in the market? I'll start with you, Bradley. Yeah.
Yeah, I think definitely potency, quality, price are still kind of the three key metrics. I think we're all trying to get this industry off the potency narrative, but it is something that we kind of, I think, all collectively continue to wrestle with. It has been interesting to see the non-infused pre-roll potency in recent months. I think Adam was the one that alluded to that. I still think, even in terms of how we regulate the industry, I still think we have a ways to go there, because I think we've seen some pretty inflated numbers on the non-infused category in recent months, maybe even the last year. That's why I think you're starting to see the infused segment slow a bit. So I think we have a long way to go there. And potency is such a key driver, and I think you're seeing that influence through some of the potency that we've seen on non-infused. When I look back on the category as a whole, I just think that's one thing that we probably need to really dig in on as an industry. And I know we've in the past as an LP been talking about that, but it's definitely something that we've been pretty focused on in more recent months.
Right. And the topic of shake versus flower, I mean,
yeah. And yeah, I think that goes back to what we were talking about from a quality standpoint. When we have such a strong year on Big Bag of Buds, it's about leveraging that strain equity and that whole flower performance into our strain specific pre-rolls.
Got it. Thank you. Adam, the same question for you. Just trying to understand the pre-roll consumer better here.
Yeah, I think we're all trying to, figure it out and see where it goes. I think that's that's the ticket. But I think what we've seen is, it's kind of all the above, Pablo. Like, one of the interesting things, and especially as you get into coated pre-rolls and infused pre-rolls, there's such a thing as bag appeal to pre-rolls now. They're, as we've said, they're a difficult product to make and they're a difficult product to make consistently. But, the consumer is sort of pushing on us continually to, ensure that, if they buy a ready to consume product, it looks the same and every single joint is the same. So I think, as we continue to mature, is standardizing manufacturing in the product such that like, every tube and every pack of pre-rolls looks identical. So that's a new sort of thing that's coming up. And I think, there's some brands who are doing that better than others and they're getting rewarded with it, with their performance. I think the overall, quality or, performance of the pre-roll is really important. So can you smoke it all the way through? Does the flavor remain, throughout the entirety of the joint? Is it harsh? The crutch or the mouthpiece or whatever you want to call it. I kind of refuse to call it a filter because it's not that. But what is the makeup of that? So I think, as I kind of said before about pre-rolls, like there's a lot of different innovation and there's a lot of different ways that you can put these things together. I think what we've seen from consumers is that they value consistency. They obviously want the product to perform. And flavor is a big part of it, right? And sort of that comes from the terpene profile. And so, as we know, consumers are drawn to sort of, sweeter, really recognizable flavors. And so that's a big piece of it too. So you're matching up your extract with your input material with your terpene profile. So all of those things really matter when it comes to the pre-roll consumer and getting that recommendation ultimately from the bud tender as well.
Right, but staying with you, Adam, I mean, of course, I hear you on the consistency front, obviously a key factor, but is that a differentiating factor? I would have assumed that most of the leading brands already have consistent product in the market or not necessarily. And I'm not trying
Not necessarily. Yeah, not necessarily, right? And depending on how you're putting the pre-rolls together, I think anybody who's put out a pre-roll mixer pack will know some of the heartache that can come with that when you have three different flavors from three different sort of flower input materials all put together and, different densities and all that can happen. And so just joint sizes can be different sometimes. But they still want that consistency. So are there certain manufacturers, who are better than others? Absolutely. But I think as we said, these are difficult products to make, and those that can do them at scale, like we've proven that we can do at Decibel, are going to be able to do that more consistently and continue to put out a more refined product.
Got it. Thank you, Scott. The same question for you on the same topic, right? Understanding the pre-roll consumer.
Yeah, absolutely. Well, all of those variabilities or attributes matter, but it really depends on the consumer and the segment of each one and how it kind of plays a varying role to the consumer and what they're choosing. We find the new consumers are less knowledgeable and they're just looking for an end result. They may stay closer to price and potency as they're just entering into their journey, where a knowledgeable consumer will look into the quality of the inputs, the live resin, the keef, and understand what those different attributes do to the end result of the product. But by and large, definitely still price, potency. I think we're getting past that, as Adam said here, into consistency. We definitely do see the same thing in terms of the consumer wanting that consistent experience every single time, both whether that's on the non-infused or the infused side of the spectrum. And then, kind of going into your second question, but like, how do we advertise, communicate these things to the consumers? It's obviously not easy in the current regulatory environment, but I think what you'll see is, a lot of us use the label. You'll call out whether it's, liquid diamond infused or live resin infused in the name of the product. we deploy marketing trade assets in store that help communicate and educate the consumer. And then obviously, we spend a lot of time doing bud tender education to help that bud tender really educate the end consumer on some of those attributes. So, I think they all really matter. I think it's really about, understanding the consumer's journey into cannabis and, getting or hitting on those consumer needs at the right time as their journey gets into that space.
Right. Thank you. Scott, I want to stay with you now. Some specific questions to Canopy Growth and Claybourne. I'll read them, but in just about 1 year, Claybourne has become the #3 brand in infused joints. That's what Hi-Fire calls that segment. What explains this quick success? But growth seems to have plateaued now in the third quarter versus the second quarter, according to Hi-Fire, but you can comment on that. How is the non-infused part of your pre-roll business performing? In your view, is there similar brand stickiness between infused joints versus non-infused joints, right? But just some thoughts on that. Thanks.
Yeah, absolutely. So to start off with Claybourne, obviously our belief is, we have a superior product quality that we unlocked here and brought to the consumer in market. As Adam said, as we look at the infused category, there's those that can do it right and those that may not have unlocked that yet. And our belief is we really unlock that product quality and the consistency to the consumer, really about price, potency, flavor, the smoke, the harshness, and then just leveraging quality inputs to ensure that overarchingly just a great positive experience for the consumer. So we're really happy with the performance there. I think it shows the consumer's willingness to try new products. As we look at the consumer segments, there's a lot of consumers who we consider traditionalists or evergreens that may stick to one specific brand, but there's a lot of heavy consumers who like to try different products, different brands. And so if you have the right product, you have the right launch plans, that consumer is going to find it. So I think there's always opportunity to climb that leaderboard with the right product. As you talk about the performance of it, at some point, obviously you're going to get to levels of maturation, saturation. But we're really excited about, we have some big launches coming out this fall behind our Claybourne infused brand that we expect will continue to drive significant growth over the back half of this year. And we have a pretty extensive NPD pipeline already built out for the next 6 to 12 months that we plan to continue to drive that innovation behind that brand and continue that growth. On the non-infused part of our business, it's performing well. As of recently, we've been able to, over the last few months, we've been able to raise our prices on select SKUs, really focus on delivering improved gross margins to our investors and improve the profitability of our overall portfolio. And we believe that we have the product attributes coming out in those products to really, take on that additional price that we put on there. But overarchingly, we have seen some headwinds in that area of our portfolio. Adam alluded to kind of the potency increase we've seen in the non-infused over the course of the year. That's arguably an area where we've been a little bit less competitive, but we have strong signals to say that we're going to be competitive there in the future.
Right. That's great. Thank you. Bradley, now on to you. Some questions regarding Organigram. I'll read them out. How has the integration of Motif gone? And what changes have been made to the Motif business, if any, since you acquired it? I'm speaking there more in general. Would you say the Motif business was a lot stronger in vape than in pre-rolls? I can also ask, while Decibel and Canopy Growth seem quite focused on infused, you have more of a balanced portfolio. I know we touched on that a little bit already. Also, you have quite a few brands in pre-rolls, right? The other two companies kind of are more focused on fewer brands. Let's start with that, Bradley. Thanks.
So in terms of how the integration's gone, like any integration, there's some highs and lows, but I would say when we take a step back, we're very happy with how the integration's gone. We had a slight hiccup with ERP transitioning at a London Almer. But outside of that, we've been able to maintain our market share the last 12 months, which I think if you look across the prior M&A that's occurred in the industry, I don't think that's something that's happened very often. So we feel like we made a lot of the right moves there at the time of acquiring Motif. And one of the things we're most proud about is being able to bring Boxhot into the province of Quebec and PEI with vapes coming on board in the month of November. When we look at like the Motif portfolio as a whole, definitely much stronger in vapes than infused pre-rolls. But like I alluded to earlier, one of the things that we were most excited about with the Boxhot brand was bringing in the Diamond Doobie business, which is the coated IPRs. We're also looking at renovating the Rizzler's Twisters line, which will be more of a keef coated value-based option. That's going to be coming in the fall. basically in the weeks ahead here. So we're very close to launch there. We consider box hot and shred more mainstream in nature. So you have your shred heavies on one side with the non-coated IPRs, and then you have the diamond doobies with box hot on the coated. And then debunk is more of a premium hash infused, which we're renovating right now, and we expect to be in market in the winter. And then just in regards to like our branded portfolio, yes, it's a lot of brands. I have many active conversations with my peers in marketing. But like any business that acquires a large branded house like Motif, we are starting to have good conversations on our path forward. Definitely going to see a lot more consolidation within the bag of buds, shred, box hot, debunk brands. And then you're going to start to see us relook what we're doing with some of our smaller brands that you would see in high fire as we look to kind of consolidate into our larger portfolio.
Got it. Thank you. Adam, just on to you. I know you already touched on the, the 1/3, 2/3 between infused and infused. Maybe you can share some thoughts about US markets that you're familiar with in terms of, how high does infuse index in other markets? Or is that just the natural point that 1/3, 40%? That's one question. Another one, according to Hifyre, 97% of your sales come from infused. Would you be looking at other segments, like non-infused segments, or even within infused, would you look at blends or other formats? Let's start with that.
Yeah, good question. I mean, I think what you see in some states, and all states are a little bit, not created equal. You see infused pre-rolls be upwards of 50% of the category. I think at one time we sort of, thought that's where Canada could go. Now, look, like the infused pre-roll segment is still growing. Pre-rolls overall are going to be the fastest growing segment over the next 2 years based on, the math that we've run. And our business is almost entirely, infused pre-rolls, about 97%. We have, some participation, within the standard pre-roll segment with a sort of small offshoot brand called Craft, and then our flower brand Quest. I think what we're really focused on is making sure that every product line that we put out, that we're achieving good quality margins. I think if you saw in our Q2 results that we reported about 47% margins, up from about 42 or 44% year over year. So ensuring that we have really strong margins, and in the standard pre-roll business, it is very value orientated. That's where most of the volume is, in value, slims, those segments are harder to compete with when you're, cultivating in a sort of indoor craft environment. And, with the acquisition of AgMedica, and the growth of our export business, we're able to monetize and find, the margin optimal solution for all of our biomass. So, whether that falls into infused pre-rolls, exports overseas, or into, different product categories, we're really, really focused, on making sure that we're maintaining good margins so that we can reinvest it, into the business and into our brands. As we view brands as being long-term critical to value creation.
Right. And here, not to draw a comparison between Claybourne and General Admission, but I guess how can I put it? In your case, General Admission is your own brand, so that probably helps your margin, whereas maybe Canopy has a license fee to pay. But correct me if I'm wrong, Scott. On the other hand, some people would say that Claybourne, it's a better known brand in the North American context, but maybe that's not true. In Canada, General Admission has been number one in infused. But any thoughts there that you want to share, how you see that in terms of the economics of the infused business?
Yeah, I mean, as we've discussed, the excise burden is relatively large on infused pre-rolls. Manufacturing process, needs to be very dialed in order to and efficient in order to, be able to achieve reasonable price points, for the consumer, and still sort of maintain adequate margin. So, the fact that, our sales and our brand are our own is certainly an advantage, when you're looking at the margin of a product. And I think as we look at General Admission, sort of, it wasn't the first, but it was the first to scale infused pre-rolls. And obviously with Jeter and Claybourne coming in, we've seen our infused pre-roll share come down over the course of the last 18 months. But if we look at, from April onwards, we've grown, about a half to a full share point in the category and sort of come back to, a strength position, and still maintaining our number one spot. And I think, our research and sort of soul searching during that period of time, what was really heartening to us is that General Mission is well known, it is loved. The repeat purchase rate, on the brand, the multi-pack or multi-unit purchase rate on our brand is very, very high. Really kind of critical retail metrics that we look long and hard at. And I think the other thing is General Mission is really, starting to establish itself as a brand. And when we ask our fans and our consumers, what do they think about General Mission? Generally, it's there's kind of one or two things that sort of come up, over and over and over again. And one of them is around flavor, sort of known for kind of the newest, latest, and greatest, and some of the hero flavors, of the category. And we've seen many other LPs try to copy and replicate a number of things that we've done, and sort of including our hero Tiger Blood. There's been a lot of duplicates, but they've all sort of gone by the wayside, despite trying to be underpriced or sort of replicate our product. So that says to us that with strong repeat purchase rates, strong multi-unit purchase rates at retail, and being consistently known for a few things, we feel really good about the establishment of our brand, and that's why margin is so important, so we can continue to reinvest, to continue to get that growth and that stickiness.
Right. Thank you. Look, I'm going to move the conversation now to the competitive environment again. But Scott, I'll start with you. We want to talk about a couple of brands that are not in this panel, right? Sometimes it's uncomfortable to talk about competitors that are not in the same room. But, if we talk about the competition in pre-rolls and infused, Scott, Jeter is number 2 in infused joints with 10% share. Any comments on how they are performing and executing? And related to that same question, Scott, I'm not going to ask you to talk about the economics necessarily of Claybourne, but any comments on the idea that Claybourne is a licensed brand? How is it price position versus Jeter and general admission in infused pre-rolls in a Canadian context? Obviously, the brand is doing great for Canopy growth, and I think in the calls they've said it's margin accretive. But if you can just expand on that, Scott, thanks.
Yeah, absolutely. So when we looked at the Claybourne brand last year, one of the things that we were looking at is really like ensuring that there's IP there. And as Adam and we've talked about here on the panel, consistency on infused and being able to do infused properly is not easy. And so when we came across Claybourne, we looked at the opportunity with Claybourne. We looked at the US. We felt that it has a great opportunity. It had a lot of really great IP, and obviously that's come through with the results that we've seen here in the past year. So, we had to balance the, making sure that we have the right quality product. We believe it's the most superior product in its segment. And that was, what we were willing to do to ensure that we had that competitive product. As we think about, the competitive set, obviously GA has been doing great for a historic, amount of time, the first to market. Jeter has come in, and they've done fairly well, but we're still internally believing that our quality is superior to the others in the market, and that will eventually, take effect.
Right. Scott, I'm going to stay with you there. Is the Jeter in Canada infused strategy and product exactly the same as what they use say in the California market, or do anything strike you as different?
At the highest level, I haven't seen anything majorly different. When we think about price points in Canada, Jeter and Claybourne in the US are a little bit higher priced. So we're obviously looking at the price point of our Claybourne product amongst the competitive set here in Canada. But we do see that prices be, very, very crucial to the end consumer. So we're monitoring that as we go.
Right. And Bradley, same topic on the competition in pre-rolls, but outside infused, I think that Good Supply, Redecam from Tilray do well in that category. Any comments on how they are performing and executing, and how you're executing vis-a-vis them in non-infused?
I mean, I think seeing Tilray get that.
We can't. Are you on mute? I mean, we can't hear you.
Can you hear me now?
Yeah, go ahead. Yes.
I think in recent months we've seen Tilray get back on the front foot with the Redecam business. They've had quite a few new genetics roll into their lineup, and you're seeing that come through in the Ready side. And you're seeing some pretty high potency figures come through too. So they've done a good job there, and they're definitely on our radar, as they've always been since they launched Readies in the first place. And then another province for us that we feel like we have white space and a competitor who's done a really good job is Quebec. Now Quebec's a bit unique because they have that 30% cap, which is very challenging in the infused space, obviously, which is generally of a higher potency. But Canara's done a great job there. They have quite a few top selling SKUs in the top 10 via Weed Crawler, and we feel like we have some good plans in place to address the next XQDC planogram with some unique and novel SKUs that would be specific for the province of Quebec. We've had a lot of success there with our Lough brand, which predominantly just exists in Quebec on whole flower pre-rolls and hash, and we think that there's some room to run on that too.
Okay, thank you. Adam, any comments you want to make on how Jeter is performing in the Canadian market?
Yeah, I mean, obviously Jeter, is a worthy opponent or competitor. I think they've done a really good job, with their launch and sustaining it. And I think there continues to be a lot of different noise that comes into the infused pre-roll category, whether with big brands like Jeter and Claybourne, or smaller brands trying to disrupt in some form. So, I think I think again it goes back to the consistency and the ability to sort of execute not just on a one-off point in time, but execute over the course of several quarters and years. So there may be some blips over time, but I kind of foresee the best executors and people who can put out a great brand and a great product are going to be the ones who are going to be successful long term.
All right, thank you. Look, I want to move the discussion now to more general questions about pre-rolls. I'll read them out. I'll start with you, Adam. In general, your outlook for the Canadian pre-roll market and more broadly the Canadian rec market. Any regulatory changes that could impact pre-rolls specifically at the national level? And then your expectation for the rollout of vape in Quebec and how can that impact pre-rolls? And is there any export potential for pre-rolls? Adam, I know there's a lot there, but let's start with that.
Yeah, a lot there. I mean, obviously the biggest regulatory change that would have an impact is the excise rate. So, any relief there, even just going to a single excise stamp to simplify supply chain would be helpful. I think that is probably the logical first step in terms of excise reform. Before we can get rates changed, is just simplifying the structure. And going to a universal excise stamp. And something that C3 has been lobbying for and pushing for as a kind of a first great step. I think we talked about sort of the outlook on pre-rolls, very bullish on pre-rolls long term, very bullish on ready to consume products long term. I think other regulatory changes that would be helpful, and I'm sure Bradley would like this too, is some increases in terms of max allowable THC, in whether it be edibles, beverages, or pre-rolls. I think that would obviously, and in vape, that would obviously open up opportunities for more innovation. Quick comment on sort of the Quebec sort of vape category. I think it's interesting, like it's 30% limit. I think the product construction becomes a little bit difficult, whether, how much a consumer is going to want to switch from, their current supply of, north of 80% extracts, or go to a 30% sort of blend of, multiple different cannabinoids and potentially, other things in there to sort of stay under the 30% limit. We decided to sort of a bit of wait and see approach on Quebec vapes just to see how the segment performs. We weren't as bullish on it contributing, as much as it would if there were sort of just the regular limits like in the rest of Canada. So, but generally, those are kind of my thoughts on the ready consume business in Canada overall.
Thank you. Bradley, the same set of questions for you.
Yeah, I think when we look at our portfolio, and I know there's been a lot of discussion on quality, and I think that's going to be one of the benefits of as we look to kind of consolidate our portfolio under our larger brands, like a Big Bag and a Shred and a Box Hot, is it's getting our SKU count into a little bit more of a manageable place, which will allow us to really focus in on that segment level quality that we would see on the coated and non-coated pre-roll business. And in terms of the industry outlook, definitely need one excise stamp. Like we need a win as an industry, and I think we've all kind of locked arms on that one. It would just really ease the burden of our supply chain, both with the provinces and predominantly the LPs as well. So really would love to see that unlock. And then yeah, like to Adam's point, like larger packs, especially on Infused, like if you look at traditional pre-rolls, a lot of consumers are buying at those 10 packs, and we're generally stuck in the 3 to 5s, the 3 counts and the 5 counts. And some of those like the heavier consumers, they're going through that in a matter of days, not weeks. So that's just a change in purchase behavior that we would hope to see with some regulatory change. And then there's just going to be a continued shift to RTC, like ready to consume products, specifically pre-rolls and gummies and vapes. Like that's where we see a lot of our growth. That's why we went out and acquired our gummy site in Winnipeg. That's why we went out and acquired Collective Project. That's why we went out and acquired the Motif business. Is we feel like that's the future. But in the here and now, we're here for flower and milled and in the traditional pre-roll business as well, obviously.
Yeah, got it. Thank you. Scott, same set of questions.
Yeah, so we expect, with Quebec, as Adam alluded to off the top, they have a tight assortment there in Quebec. We do expect them to expand their assortment in pre-rolls and infused pre-rolls here over the next 12 months, leaving opportunities for other LPs to get into that market and drive additional growth. And then outside of Quebec, when we look at the total, recreational Canadian market, especially pre-rolls, we see growth year over year over the next few years, albeit single-digit growth, but we do see growth in the pre-roll segment ongoing.
Thank you. Look, I know we're running out of time. I want to read some brief questions from the audience. Anyone can answer. Someone asking if you have any plans on hemp THC beverages, right? Hemp Delta 9 beverages in Canada. In the case of the US, they are a fast-growing category, although the numbers are not 100% clear, in my opinion. And they're a way for companies to also build brand awareness. Are your companies working on that? I don't know if you can disclose any of this, but anyone wants to answer on hemp? I know our conversation is pre-roll.
Can maybe go in on that one. That's one of the predominant reasons why we bought Collective Project is for the THC hemp-derived business in the US. We do have agreements with multiple states in place already, and we're starting to kind of build out our muscle down there, and that's where our focus is going to be on the beverage side. So we have Collective Project, and then we have Fetch as well.
Right. Can you remind the audience about the North Carolina company, OBX? I mean, that's more an ingredient supplier, right, on the hemp side?
Yes.
Right. So it's complementary.
Yeah, just more of it. Correct.
Yeah. Anyone else, Adam or Scott, on hemp beverages? If you have anything to say, it doesn't matter. Okay.
We're not focusing on it from Canopy.
All right. Another question in terms of the export potential of pre-rolls, if anyone wants to bring that up.
Yeah. As of right now, we don't see it being a permissible way, but that could change in the future.
Right. Okay.
Yeah. I mean, I think on that, like there are some regulatory challenges. There is some interest. I think the challenge really comes down to the prescribers and the doctors. If they're prescribing medical cannabis, especially flower, the direction is to vaporize it, not to combust it. We know that doesn't always happen, and the patients don't always follow that. But with a pre-roll, you're effectively, forcing a doctor to prescribe a combustible, product. So, but there is some level of interest in some markets. There is certainly some regulatory hurdles that you need to go through, but one of the benefits, of sort of owning your own GMP asset is you can develop, products in partnerships with, others over in other markets. And something that we're actively working on is we know that, the shift from, just dried flower as the predominant product of choice in export markets, going and seeing, how patients, likely will follow along what we've seen in Canada for ready to consume products. And, we know that manufactured products can also add, more margin and more, defensibility to products down the road. So something that we're very focused on from an export perspective is leaning into manufactured products and getting those started, may not be a bet that, pays off today, but certainly for the future.
Right. Just a quick answer, Scott. Someone is asking if Claybourne is just a pre-roll brand.
So as of right now, it is just a pre-roll brand, but we do have plans to expand it outside of just pre-rolls.
Right. But in the US, is it a brand that plays in various categories or mostly pre-rolls?
They just recently launched in vapes, and we're following suit up here in Canada.
Got it. Thank you. And Adam, I know you touched on this. It's more for you to maybe expand a little bit. You said that in some US states, Infused is more than 50% of the segment. Can you give an example of a couple of those states? And again, maybe you want to repeat yourself, but why is it that we're not at 50% in Canada? And I know you touched on it before, but just a brief answer, Adam.
Yeah, and I'll be honest. I mean, I haven't looked at the U.S. data in a while. So my and this is scratching my memory a bit, but I think some of the Western states, whether it was like Colorado, Oregon, Washington, or California, again, don't fully quote me on that, but they were higher when we were first looking at the infused pre-roll category and moving in that direction. I think when you look at some of those sort of Western, U.S. markets that have been in a form of legalization for a while, you see things like concentrates, like loose concentrates, making up, a much larger portion, of the overall segment. Generally that's kind of where we've seen a sort of higher ratio. Was in the Western states, but again, I haven't looked at the data in a little while. As what we're finding is that not everything that transpires in the U.S. also comes up to Canada. So balancing where you take the insight from to kind of manage your own strategy.
Right, but I'm sorry to make you repeat this, but and again, why wouldn't it be 50% in Canada, in your opinion?
In my opinion, I think there's different regulations, and so you have different product types. There's, in some cases, and I know things have changed, in a number of states in terms of what the regulatory, requirements are. But how many THC milligrams per pack you can have, some are unlimited versus not, or have been in the past. So sort of unlocking some of those, opportunities. So like I know. There's a brand in the US that's I think launched like a 3 or 4 gram vape, which is becoming popular, something that we couldn't really do here in Canada. So, based on their regulatory environment, it sort of unlocks more use cases that might appeal to sort of consumers that are not fully served by the legal market based on our regulatory, requirements here in Canada.
Right. Thank you very much. Look, I know we're out of time, but thank you very much to our three speakers and to the audience for listening in. The call will be recorded and will be live in Restream in X. So closing remarks, Scott, let's start with you.
Yeah, so thanks for having me today. Canopy's made significant strides over the past year on revitalizing and focusing our portfolio of products, ensuring we're playing in the biggest areas of the market with intent, flowers, pre-rolls, vapes. We've spent a lot of time engaging with our consumers and bud tenders to understand the needs of the consumers, and we're excited about the innovation we have coming down the pipeline over the next 6 months. So thanks for having me today.
Thank you, Scott. Bradley?
Thanks for having me today. I think obviously we've had a very busy year at Organigram, and we're really excited for what's to come, especially now that we kind of have the collective project business into the fold on the beverage side, and specifically to pre-rolls. Again, leveraging the strain equity that we've built on Big Bag of Buds this past year into the non-infused pre-roll business, and then really pushing and extending out on Box Hot, which we feel like is definitely deserved in the coated IPR space. And we also just recently launched Happily in the US as well as part of that collective project acquisition with Beverages too, and in our Center of Excellence pipeline. So more to come on that in the months ahead, but exciting times here at Organigram.
Great, thank you. Adam, closing remarks.
Sure. Yeah, I think 2025 has been a huge year for Decibel. We've really stabilized and back to growth in our Canadian domestic business with a platform that will allow for further growth, but also continued margin expansion and profitability. And then the real growth wedge of the business, which is our international business. In Q2 we reported sort of our record exports, and really seeing growth in all sort of key metrics that are really important, from gross margin to cash flow to top line and EBITDA margin and overall EBITDA. So I think the fundamentals of the business are very, very strong, and we're really excited about the growth ahead of us both in Canada and overseas.
That's great. Thank you, Adam. So again, thank you to all our three speakers. Everyone, have a good day. Thanks.
Thank you.
Thanks all.
Thanks, guys.